the lifespan of all your traditional conventional assets is 30, 40, 50 years, and you're going to get up every morning and watch CNBC to find out whether Apple won or lost the frickin' tax lawsuit. The first law of money says you divide the value of the asset by the maintenance cost. So something divided by 10 basis points lives 1,000 years. This is the longest duration financial or longest duration asset the human race has figured out, right? We've invented. This is digital capital.
About a week ago, MicroStrategy Executive Chairman and co-founder Michael Saylor delivered another super bullish presentation on Bitcoin at the H.C. Wainwright Annual Global Investment Conference. Saylor's powerful keynote speech titled "The Digital Gold Rush" outlines why Bitcoin is a game changer for institutions and other categories of investors looking to diversify their portfolios and safeguard against the big elephant in the room, inflation, and the constant devaluation of fiat currencies. During his presentation, Saylor describes how Bitcoin is a huge improvement on other asset classes, including large stock indexes like the S&P 500, gold, high-yield bonds, and other commodities. Saylor points out that monetary inflation is the big monster every investor must overcome to protect and build their wealth over time. Unfortunately, only a few assets manage to outperform the 13.3% average annual monetary inflation rate. While this is an issue sound money advocates have often warned about, many investors are quite unaware of the correlation between monetary inflation and their investments. As long as they are making some money on their investments, they assume they are in the clear, failing to consider how much of this gain is being eroded by inflation. Saylor adds that monetary inflation drastically shortens the lifespan of various asset classes. Weak currencies like the Turkish lira and the Venezuelan bolivar have a very short lifespan of less than 5 years, while you only get about 14 years on the US dollar, the world's reserve currency. Though you get a longer lifespan with physical assets like land and art, nothing comes to the 1,000-year lifespan of the largest cryptocurrency by market cap. As we bring you clips from Saylor's presentation, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
If we look at the performance of a bunch of assets, and this is most assets over the last 14 years, what you can see is that, investing in a bunch of things don't even beat the CPI, but there are a number of things that will beat the CPI. I mean, your typical diversified portfolio, your stocks, your real estate, et cetera. But the question is, what's the real benchmark for an investor? And I don't think it's the CPI. The CPI is a very synthetic metric, which is cherry-picked by a bunch of government-paid economists in order to be the lowest possible measure of inflation. If things get too expensive, they throw it out of the CPI. A much better measure would be the monetary inflation rate, or the expansion of the M2 money supply. And it turns out that the expansion of the money supply very, very closely tracks the performance of the S&P index over 100 years. And when you think about it like that, what you realize is that when you invest your money in the S&P index, you're not making money. You're just not losing money. If you were rich 100 years ago and you held a diversified portfolio of stocks, you're still rich. If you bought a bunch of currency or bonds, you're poor. And you can see here over the past 4 years, the S&P or the monetary inflation rate looks like about 13%. And not many things beat that inflation rate. It's very, very difficult. In fact, if you're beating that hurdle, you probably beat it with big tech. You beat it with Apple and Amazon and Google and Facebook, because the best idea in the 21st century has been buy a big tech digital monopoly like a Meta or a Microsoft, somebody that's that everybody needs, nobody can stop. And if you bought it before people understood it, you're probably doing okay. And even after they understood it, you're probably okay. But diversification generally is selling the winner to buy the losers. If you diversified out of Amazon, you lost. If you diversified out of Apple, you lost. If you diversified out of Microsoft into any of the 100,000 other business software companies, you lost. And why is that? Because in the modern era, if you can establish a digital network which goes to 1 billion people, it's got such a crushing economic advantage that it's unlikely that anybody else is going to be able to catch up with it. And Microsoft is proving that today, so many years after it was founded. Now, the question is, what's the solution? Is Bitcoin the solution? Well, the last 4 years, Bitcoin's performance is 46%. It's totally crushing every other asset class and every other idea. And it's definitely beating the rate of monetary inflation. This is a chart put up by Bitwise yesterday. This is the last 14 years of Bitcoin. As you can see, the top performing assets, the top of the chart, Bitcoin is winning the investor Super Bowl 11 out of the last 14 years. If you're paying attention, you got to wonder, like, why is it winning? And is this a gimmick? Now, the advocates of Bitcoin, such as myself, who wear orange ties, we think that Bitcoin is the first perfect money. We think Bitcoin is paradigm shift. We think Bitcoin is the singularity where science collides with economics. We think you have to rethink economics. You have to rethink capital. You have to rethink money. You have to rethink business. You have to rethink corporate finance. That's what we think. And that's why we're winning. We think there's a fundamental technology shift here. There's a fundamental paradigm shift here. And we think we're going to keep winning. We think Bitcoin is digital gold. We think it has all of the virtues of sound money, none of the vices of physical gold, which was that barbaric relic.
Skeptics of Bitcoin have quite a number of arguments against it. It's used by criminals. It has no real utility. It is too volatile and unstable. It is backed by nothing. The government will soon ban it, or it will be hacked by Russians and North Koreans. However, Saylor is not bothered about these futile arguments, each of which he has disproven in his many speeches and social media posts. According to the MicroStrategy executive chairman, everyone is against Bitcoin before they are for it. As big a maximalist as Saylor is today, he was also a Bitcoin critic less than 11 years ago. In December 2013, the billionaire business executive tweeted, "Bitcoin days are numbered. It seems like just a matter of time before it suffers the same fate as online gambling." Saylor believes the only thing that separates a Bitcoin critic from an investor, trader, and maximalist is the hours of research. Everyone starts as a denier, then they become skeptics, and to back their arguments against Bitcoin, they begin to research more about Bitcoin until they eventually make the life-altering journey from skeptic to trader, investor, and maximalist. Let's get back to Saylor's speech.
Global wealth is distributed across a lot of assets. There's $900 trillion worth of wealth here. And you can come up with different charts, but this is a reasonable one. You could think of it as, oh, I own some real estate, I own some bonds, I own some money, I own some currency, I own some equity, I own some art, I own some gold. But the real question is, why do you own this stuff? And it's divided into two categories. You own it because it's got utility. You want to look at the art, you want to live in the building, you want to hang out in the yacht, you want to fly the aircraft. Maybe you need the currency for working capital to operate your bakery or your manufacturing plant. Maybe you have your money in coal or oil or some other feedstock. So that's one reason to have assets. And the other portion of this is just long-term capital. I'm just storing value. It's a rich person that has a bunch of money and they don't know what to do with it, so they buy something, right? Whenever you hear about a billionaire that bought 16 expensive houses, you're like, well, they can only live in one. Why do they keep buying things? Well, because they think it's a better investment than just putting the money in the bank. So when you think about the world that way, you say long-term capital, store of value. Well, that's half the money in the world, or half the wealth in the world, $450 trillion. Bitcoin represents the transformation of our capital from financial and physical assets to digital assets. The first law of money says L equals V divided by M. The lifespan of an asset is equal to the value of the asset divided by the maintenance cost of the asset. If you buy a $10 million yacht and you spend $1.5 million a year to maintain the yacht, your $10 million is gone in 6 years, right? Your money, the useful life of the yacht is 6 years. You're not going to stay rich buying and investing in yachts or, fill in the blank. If you buy a house in Miami Beach, you're going to pay as much in taxes as the house cost you within 20 years. It's not a store of value. When you start to apply this formula to all these assets you can put your capital into, you realize that some of them have a very short useful life. The Argentine peso won't hold your capital more than 2 years, nor will the Turkish lira. The US dollar might hold your capital for 10 to 15 years. You invest in stocks, maybe 25, bonds, not more than 30, diversified mutual fund, the S&P index, you're still getting diluted by that. So all of these financial assets have a useful life, 10, 20, 30 years. And why? Because of all these risk factors. This morning, the news is Apple gets a $14 billion tax bill. Oops. The next news is Google gets fined $2.5 billion by the EU. Oops. Torts, taxes, war, crime. Oops. Maybe there's a tariff that's going to interfere with your trade. Think about all the risk factors when you're buying a financial asset. Hyperinflation, right? Maybe you suffer from a new regulation. Oh, it's just illegal to do what you do. Oops. If you invest in a stock and read the 10K, there's 20 pages of these risk factors. I'm an expert on these risk factors. We came public in '98. Our company must have published hundreds and hundreds of pages of risk factors. So there must be hundreds of thousands, maybe millions of pages of SEC filings on risk factors. This is the dilemma of storing your capital and equity if you're an investor. So what do wealthy families do? They run to physical assets and they invest in what? Probably not yachts and Ferraris, but maybe gold or paintings or land. Land is everybody's favorite thing, but land gets taxed at 1% a year. The average property tax rate is 1.1%. And that means it's gone in 91 years if the property value doesn't get assessed up. When the government assesses the property value up, they tax your land away from you in 30 or 40 years. You don't own it. You're renting it.
Financial assets are plagued by various risk factors, including regulation, taxation, competition, incompetence, obsolescence, and natural disasters. Saylor explains that it is only by going into the digital world that we are able to avoid these risk factors. And what better way to do that than by investing in Bitcoin, the world's largest cryptocurrency by market cap, and the very foundation of the entire digital asset space. In other news, MicroStrategy has unveiled plans for a private offering of $700 million in convertible senior notes. The software and business intelligence company plans to raise capital to pay off existing debt and purchase more Bitcoin. This is coming less than 1 week after Saylor announced the acquisition of 18,300 Bitcoin for $1.11 billion in a social media post on Friday. His post reads, MicroStrategy has acquired 18,300 Bitcoin for approximately $1.11 billion at approximately $60,408 per Bitcoin, and has achieved Bitcoin yield of 4.4% quarter to date and 17% year to date. As of September 12, 2024, we hodled 244,800 Bitcoin acquired for approximately $9.45 billion at approximately $38,585 per Bitcoin. Saylor has always maintained that MicroStrategy will keep buying and hodling Bitcoin for as long as possible. The billionaire business executive also has a super bullish $13 million base case prediction for Bitcoin by 2045. Please share your thoughts on Saylor's presentation as well as his super bullish price prediction for the leading digital asset. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.